got a great presentation for you. This is our winning momentum strategy. I've got a few slides, PowerPoint slides, just a handful, and then we'll switch to our live charts and spend the rest of the time on our charts. So let's get started. A bit about us here at Trading Wins before we get into the presentation. We are a group of pro traders with well over 30 years of experience. We are real traders and teachers, and we've been developing our own strategies and trading systems and teaching people around the globe from complete beginners to experts. Now, in today's presentation, I'm going to share with you the exact same money management rules that myself and the other traders here have been using for many years and continue using today. I'm going to tell you exactly what you're going to need for this system. And then I'm going to show you step by step. I'll walk you through our winning momentum strategy. And at this point, I'll bring up my live charts, and I will ask that you type in a symbol or two, whatever stock, futures, contract, Forex, pair, really doesn't matter. We'll bring it up. We'll review the chart together and see how this would have performed on that particular market. And of course, we will try to leave as much time as possible to answer all of your questions. A couple of quick poll questions before we get started, just so I know who's on here with us today, and so that I can tailor my examples to you specifically. Can you please take a moment and tell me, which market do you trade most? Is it stocks, options, futures, or Forex? If you can just take a moment and type that in, I'd really appreciate it. Excellent. Thank you very much. Well, we have a pretty good mix. A lot of Forex, futures. All right, excellent. Oh, and options as well. Beautiful. Okay, I promise I will show you examples of each. One last poll question. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active? Please make your selection, or type in your selection, please. Appreciate it. Oh, wow, 100 plus several right off the bat. Great. Okay, some very active traders. I think you're going to like what I have for you here today. A bit of the legal stuff first. Please remember, trading can be extremely risky if you don't know what you're doing. Please educate yourself first, and do not trade with real money until you are completely comfortable. On that note, let me show you how we reduce our risk here at Trading Wins, and let me share our money management rules with you. The first one, I'm sure you've heard many times: do not trade with money you can't afford to lose, but it is worth repeating. And more importantly, it is all about trading with an amount that's small enough that it feels completely insignificant to you. Trading is so much more about how you manage a trade once you're in it than it is about selecting an entry. Once you're in a trade, you really do need to remain calm, think clearly, and manage that trade. And if you're worried about the amount of money you have in that trade, you simply won't be able to do that. So regardless of the amount, just make sure that it's small enough that it feels completely insignificant to you. Next, you should never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing this to 2.5% or even 2%. That way, you'll still have a very sizable trade on, but you'll reduce your risk considerably. Also, never have more than 50% of your account balance active in the market at any one time. And usually, I get a number of people responding at this point saying, why would I leave half my account just sitting there earning nothing? Well, reason being is actually twofold. Number one, there are so many factors when it comes to the markets that are completely out of our control. Okay, there could be a news announcement at any moment, or God forbid, another catastrophic event like 9/11 that can drive the markets against us in a hurry. And so, number one, this rule will help reduce such a loss should it happen. But number two, we'll then have enough money there to put back in the markets and recover from that loss. And with what I'm going to show you today, trust me, it really wouldn't take you very long. Lastly, never place more than 2 trades per time frame, okay? Regardless of the time frame, you should be selective and spread out your trades. Recently, we've seen a lot of added volatility in the markets. We've seen days where you know, the Dow Jones has been up 300 points. The very next day it drops 200. And that's exactly what you want to avoid. On a strong day, be it up or down, you're going to get a lot of setups. And if you jump in with 5, 8, 10 trades, the very next day the market moves against you, you're going to be in a big hole right off the bat. So what you want to do is select the 1 or 2 best trades per time frame and spread them out. Okay? A couple of other sayings we live by here. Number 1, you will never go broke taking profits, especially if you're just starting out. Take this to heart. As you get more and more experienced in the markets, you're going to learn how to remain in a trade a little longer each time and squeeze out every bit of profit. But until then, please get used to banking those profits. And remember, trading is never about whether you're right or wrong. That's important, but it's all about how much money you make when you're right versus how much money you lose when you're wrong. So what will you need to trade this setup? First of all, this strategy can be used on just about any charting platform. There are 3 indicators we are going to plot on our charts, and that is the 20-period simple moving average. And before someone asks, we have tested this over many, many years with exponential, with weighted, different periods. We've always come back to the 20-period simple moving average. It works best mainly because it is the most widely used moving average out there, both by professionals as well as retail traders. Second indicator we're going to have on is the Ichimoku Kinkin-Hoi indicator. And excuse the pronunciation if it's not accurate, but we're not using the default indicator. We're using a very stripped down version of it. I'll explain in a moment. And then of course there's the relative strength index, the RSI indicator. Now most of these indicators are available, or excuse me, they're available on most charting platforms. So there really is no need to go out and spend money on new hardware or complicated software. If you're watching this webinar, you already have everything you need. Okay? A few benefits of this system before I show you the actual setup. It will work on any market. Stock, options, futures, Forex. I'm going to walk you through examples of each. Globally, any time frame, any price level. We've traded this with $2, $3 stocks, and with the monster stocks such as Priceline, Google, Amazon, does equally as well. Also, you don't need a lot of experience to use this. Once I show you the setup, you'll see just how quickly you'll be able to pick this up and spot it on a chart. It has very clear entry and exit points, has extremely low risk, I'll show you in a moment, and more importantly, it is consistently profitable. As I said, we've been trading this over many, many years through all different types of market environments, and it has been consistent. So let's look at the components of the strategy. Again, there's 3. There's the 20-period simple moving average. There's a stripped down version of the Ichimoku Kinkin-Hoi indicator, which we will be using to identify trend. And then there's our relative strength index, or RSI indicator, that will identify our entry points for us. Okay, but again, we use it slightly differently, different settings. I'm going to go through all of that with you right now. Let me just bring up my live charting platform, and I will walk you through this. Now, before I go through the indicators and talk about the setup, there's something I want to show you that is very important, regardless of whatever trading strategy you're using. When you're trading with trend and momentum, half the battle is already won. So what you want to do is select charts that are clearly trending and easy to read. In other words, one good thing to do when you first start out is remove all the indicators from your chart. So I'm going to go in here and I'm going to wipe off all my indicators. Okay. Now, if I showed you a stock such as this, okay, and I asked you, what's the next direction of this stock? Would you be able to tell me, or would you simply be guessing? And this is the point. When it comes to trading, you do not want to be guessing. Okay? You don't have a crystal ball. You are not going to know for sure what the next move is. But at least putting the odds in your favor makes trading that much easier. So let's compare this chart to something like Kruger, for example. If I asked you what the next direction of this stock would you be able to take a more educated guess? Yes. It's a nice, clean, clear, slowly trending chart. So much easier to trade with. Okay. Another one, for example, let's see, UNH. This is exactly what I'm be looking at. Okay. So our first example, Skyworks, same thing. Nice, clean chart. So let me put my layout back on and walk you through this. So in blue here, this blue line, that's our 20-period simple moving average. Okay? The cloud here, this is a stripped down version of the Ichimoku cloud indicator. Now I'm going to go into the settings and show you what the default indicator would look like. First of all, you should know I'm using the default settings of 9 and 26. Okay, you do not want to change those, leave those. What I've done, though, is removed a few lines. One of them was the Tenkan line, the other one was the Kijun, and the other one was the Chico. So if I add these on, okay, let me show you what this indicator would look like normally. There you go. So this would be the full indicator. Now, believe it or not, as messy as it looks, there's a method to this madness. This indicator has been used for many years, especially over in Asia, very successfully as a strategy in itself. And there's a way to trade with this indicator alone. And I'll talk a bit more about that later in my presentation. But what we prefer to do is keep our chart nice and clean and strictly use the Ichimoku cloud for trend. And for that, all we want to keep on our chart is the cloud portion here. And we're not even interested in the different colors of the cloud. All we care about is whether the market is above or below that cloud. And I'll talk about it in a second. Now, the RSI indicator, typically used to identify areas of overbought and oversold conditions. And typically, as you see the defaults here, well, I mean, I've changed these, but I'll tell you that in Thinkorswim and in most other platforms, the default setting for RSI is 14. We've reduced that in half. Okay? We use a setting of 7. We want a much more responsive RSI, so we've reduced that to 7. The other thing you normally see on the default indicator are the overbought and oversold lines, which are either at 70-30 or at 80-20, depending on the software. We, again, have removed those and are simply drawing a line right down the middle at the 50 level. Okay? So those are our settings for our indicators. Now let me explain how we use these together to trade with. So again, what we're looking for is trend and momentum. Now, clearly this is a nice, a slow, steady uptrend. And the way we identify trend, though, is this. When the candles and the moving average are above the cloud, we're in an uptrend. If the moving average and the candles are below the cloud, we're in a downtrend. And if they're overlapping the cloud, we're in a period of consolidation that we do not want to trade with. Okay? So we're strictly going to trade. We're going to take long trades in an uptrend, and we're going to take short trades in a downtrend. Okay? So the other thing we need to judge is momentum. How do we do that? We do that based on the slope of either the bars or the moving average. This is where the moving average comes in very handy. It kind of draws that in for you. So what we want is the more significant that slope, the better. And we can have slight momentum here, a little more momentum, or we can have very significant momentum. And the more significant that momentum, the better. It works exactly the same way in a downtrend, and the more significant that slope lower, the better. Okay? So let me remove these and walk you through the setup. Just get my pointer here. There we go. So when we're in an area such as this, where the candles and the moving average have cleared the cloud, they are now above the cloud. Now we know we're in an uptrend. we judge the slope or the momentum by the slope. If we have a nice significant slope, we know we also have momentum on our side. Once we know that we have trend and momentum on our side, then and only then do we focus our attention on the RSI. And what we're looking for a long trade is we want the RSI to either come back and touch that 50 and turn around higher, or cross it, come below and back above. And it's on that cross back above, where that bounce off it back above, that creates our setup bar. Okay? So, for example, this here, where the RSI came back, hit the 50, okay, and it has to at least come back to the 50. You can see the number here on the chart where it currently is, all right? You have to judge it by the exact number. It has to at least hit that 50 line before turning higher. When it does turn higher, that is our setup bar, which was right here, okay? This green bar here. I'll remove this line in a second. But that was the setup bar, okay? Now, there's a difference between the setup and the trigger. That's the setup. The trigger is a trade just above the high of that same bar, okay? That'll get you in. Your stop should go just below the most recent low, okay, which will be around here. Let me draw this in for you. So a break of this high here will get you in the trade, and your stop will go just below the most recent low, which will be here. Okay? And then it becomes a matter of managing that trade. Okay? Now, there's a couple of things to remember. First of all, one very important rule. If we get a trade below the low of this bar first, we want to disqualify that trade. We don't want to take this trade anymore. Whether it would have worked out or not really doesn't matter. The point is that one rule will help you avoid most losses with the system. Okay? In other words, any trade that would have been a loser here, most of them, would not even be losses. They're just negated trades. Okay? Now, if you do get triggered in, once you're in and you take that long position and move your stop just below the most recent low here, you no longer pay attention to the RSI. It doesn't matter how many times it's crossing back and forth. You simply want to manage this trade with your exit strategy, which I'll talk a bit more about later. Okay? Now, if you are a more aggressive trader, then you can look at the RSI for additional entries. Okay? And for every additional cross from below to back above, which creates another entry bar, okay, you can add to your position. Again, only if you're a more aggressive trader. Otherwise, if you're more conservative like I am, you want to just manage that trade. Okay? Let me show you an example to the short side. Same rules apply, just in reverse. So, once the candles and the moving average are clearly below the cloud, we are in a downtrend. Second thing we look for is momentum. Do we have that significant slope lower? You can measure it by the bars. You can measure it by the moving average. The reason why we measure it with the moving average is because during a time of a pullback such as this, okay, you might mistake that movement higher, that slope higher, as upward momentum. Okay? But if the moving average maintains its slope, then you know this is merely a retracement before a continuation of that move. Okay? That's why it helps so much. So once we're clearly below the cloud, we know we have trend in our favor. When we see that slope lower, we know we have momentum in our favor. All we do at that point is focus our attention on the RSI once it moves above and then back below. So it's that bar where it moves right back below, which is this red bar here. I'll highlight it for you. Right here. That's your setup bar. Okay? At that point, you want to wait for a trade below the low. If you get it, you go short, and your stop goes just above the most recent high. Okay? Now, if you were to trade above the high of that bar first, then the trade would be disqualified. okay? And it's that simple. So once you have trend and momentum in your favor, half your battle's won, okay? All this is doing is help you identify the easy spots, the high probability setups out of these runs. Now there's a couple other things I want to tell you. When you get a move from one side of the cloud to the other with that slope, with momentum here, okay? That is significant. That usually indicates that we are in for a sustained move lower, okay? So this gives you a heads up to what's about to take place, which is huge, okay? Especially if you're trading options, for example, you can really leverage the system with options by going further out on your expiry, even leaps, going further out of the money, because the more significant that slope coming through the cloud, the more exaggerated that move tends to be, okay? Let's look at a few more examples. Here's a chart of an ETF, the 20-year Treasury bond fund. It's very simple. And here now, you can see that we've been below the cloud and the bars are within the cloud. But we're starting to move through it here with momentum. So if we actually get through this, meaning the moving average moves to the other side of the cloud with that slope and the candles follow it, then we are most likely in for a sustained move to the upside. And when you're in a sustained move, you usually get multiple opportunities to enter, okay? But again, you identify trend, and you do so by judging whether the candles and the moving average are either above the cloud or below the cloud, okay? Take a split second. Then you look for momentum. Do you have that significant slope? If yes, focus your attention on the RSI. Once it dips below and back above, there's your setup bar. You get a trade above the high, and you're in long. Okay, stop goes just below the most recent low. Okay, and you'll find these trades everywhere. Now, every once in a while, you will find what we call a double dip, which is actually very important. And this is the reason why we put our stop below the most recent low rather than below the same setup bar, because we want a bit of a buffer. And here's why. Here, at this point in here, we had a nice solid slope. So we had momentum. We were clearly above the cloud. We had trend. We focused our attention on the RSI, and you can see it came back to this 50 and moved higher. Okay, and that was on this bar here. Okay, if we had put our stop just below that same bar, we would have been stopped out due to the double dip. But because we want to go just below the most recent bar, most recent low, then we've got that buffer. Now, the stock pulls down slightly and then crosses back above here, okay, forming this W formation. Sometimes they're a lot cleaner, but regardless, it's what we call a double dip. These moves tend to be some of the strongest moves you're going to get, and you can see what a nice reaction this ETF had after that. Okay, it's exactly what you want to see. So even though it initially pulls slightly against you after the entry, and sometimes you don't even get that entry here. Most of the times when it does a double dip, it won't break that high first. It comes down, breaks the low, so it's actually disqualified, the first one. But the second one will get you in, and it tends to be a much stronger move. Here's a chart of GMCR. And once it moved through this cloud with momentum, okay, look at that slope on that 20 going through that cloud. Very significant. We knew at this point we were in for a sustained move lower. Okay? But once we cleared the cloud with both the moving average and the candles, we then focus our attention here on the RSI. We wait for that move above and back below. And once we got that, here, we wait for that trigger in, and off it goes. If, our stop would be too far away and we consider that too much risk, don't worry about it. Skip the trade. Be selective. Be very, very selective. Okay? Because during the sustained move, you're going to get multiple opportunities to enter. You had one here. Sorry, let me highlight these. Okay, so your first one was in this area. Your second one was over here. Your third over here. Okay, you're going to get multiple opportunities to enter, so you don't have to catch every single one. All right. Here's UNH, and again, the reason why you want these nice, clean, trending charts, it just makes trading so much easier. When you have that, those huge swings back and forth, your chances of being stopped out are much greater. When a stock is trending so smoothly, all you're doing is sitting back and waiting for those pullbacks and those new entries. Okay, and in this case, there's one there. There was one over here. Okay, there's a double dip for you in here. See this W right in there? Okay, which happened right in here, this area. Okay, so, and then it pulls back again in here. Regardless of which one you would have entered, okay, would have been a winning trade. And right now, UNH is in the midst of a double dip. If it closes the day like this, then you've got a valid setup. Okay, then you just be waiting for a trade above the high before entering long. Now, not every trade is going to be a winner. We're not saying that, but the majority of your trades will. And if you follow the rules, like I've explained them, you're also going to avoid most losses by following that one rule, okay, about it trading above the high before the low. Couple more examples. BPT here. Again, moved through the cloud from above to below with momentum. At this point here, we already knew it was in trouble. Okay, it pulls higher, goes within the cloud for a while. We just be patient. Then it moves again from one side to the other with a lot of momentum. And at this point, once we've cleared it, focus our attention on the RSI, and there are multiple entries. Here's a nice double dip here. Okay, the reverse, when you're looking for a short trade, that double dip looks like a an M instead of a W. Okay, so we're running a little short on time here. Let's quickly go through and let me show you how it works just as well on futures. This is the crude oil chart. Again, you're looking for trend and momentum. All right, and look at this. We already had an idea back up here that oil was in trouble. We had no idea it was going to have experienced this much pain. But regardless, we knew we were in for a sustained move. Then we wait for these crosses on the RSI, and there are many opportunities to enter throughout, all of which would have been profitable. Okay, here's the euro. Same thing. It's all about trend and momentum. Okay. Trading with trend and momentum makes trading so much easier for you. For all you Forex traders, here's the Euro Canadian dollar pair. The settings remain the same, rules remain the same, nothing changes. You look for trend and momentum, then you focus your attention on the RSI, and on this cross from above back below, right here, okay, right in here was your entry. And boom, there it goes. All right, nice and easy. Here's a chart of, sorry, was that the euro? Yeah, that was euro Canadian. Here's British pound US dollar, exact same thing. And this is why you want to look for these nice trending charts. And look what's happening right now on the British pound US dollar. Boom. So if we finish the day the way it is right now, okay, we've got another valid setup bar. Then we'd have to wait for a trade below the low of that bar before going short. Okay, so in the interest of time, I'm going to bring our coaching coordinator in. He's going to help me read off some questions and some symbols. Now would be a great time for you to type in a symbol that you want me to have a look at, and I'll bring up a chart. We'll look at it together and show you how this would have worked on that symbol. Okay, Raul?
It's, excuse me, always a pleasure to be here.
Right.
You got your drink of water. I'm going to grab mine while you're answering the first question from Genevieve.
Sure.
On AMAT, AMAT.
AMAT, let's have a look at line materials. So, of course, you know, hindsight's 20/20. It's easy to spot these areas, but I'll tell you, it's just as easy to spot the current market environment. Look at where we are now, and look at what's happening to applied materials. We're moving from above to the cloud to below with very strong momentum. This tells you that in all likelihood, this move is going to be a sustained move. It's going to last for a while. So now that we have trend, we know we're in a downtrend, we have momentum in our favor. Now we're waiting for this RSI to move back above this 50 line, like this, and then back below. And how far it goes above or below really doesn't matter. What matters is that at the time of the setup, that slope is still intact, okay? But let's look back and see if applied materials would have helped us here. You see, through this stretch, it happened so quickly, there weren't actually any entries until we got over here. Here there was one. Excuse me, let me get the right drawing tool. There we go. Right over here. This one here. Okay? And now there's bound to be one here. We're just waiting for a pullback. Okay?
Lawrence was asking about GDX.
GDX. Sure. Right here. So during these times when the moving average is flat, okay, or you're within the cloud, you do not want to trade, right? You want to avoid it. Here, there wasn't much of a slope, okay, so we wouldn't have taken this trade, although it would have worked out. And then here, when we moved with momentum, and look at the significance of that slope, it's trending lower, we had strong momentum lower, wait for that pullback in the RSI, and that dip back below, which happened right in here, okay? And off we go, boom. Just a textbook trade. Fantastic, okay? So, and now we've moved through again. Right now, though, momentum is not intact. You can see the moving average has moved higher, and we're below the clouds. So we've got to give this some time to hopefully regain momentum lower and then give us another entry.
Gerard, Nike.
Oh, Nike, sure. Nike, in this area here, this right here, and this is what you got to be careful of, right? You want to look at that 20. So during this pullback, pulled back a little too much. The moving average turned flat. Now, it gapped on earnings later, so be it, but you can see during this significant pullback here that the 20 remained intact. That slope on the 20 remained intact. So all we were waiting for is this cross from below back to above the 50 line here, which is right here, okay? And off it goes, right? Boom. How easy would that be to manage? That's exactly what you want. And right now, you can see, unfortunately, it came very close to 20. I don't know. We'd have to get the figure on that to see if it actually touched it. If it did on that day, then we'd be in another setup here on Nike long.
Looks like it works.
Yeah,
on pretty much all the ones we've selected so far.
It does work. Again, I can tell you that one of the best features of this is its consistency. We've been trading with this for many years, and again, it's based purely on technical analysis, on the pieces of technical analysis that have been proven to work. So it does work.
Terry, Shane, Simon, I do see your questions. We will get to those, I promise.
Yeah.
People are asking if this works on smaller time frames and other.
Yeah,
we looked at stocks.
Absolutely.
Can we do a smaller time frame check? So can we do the E-mini S&P?
Sure.
On the 15-minute.
Sure. So let's go.
That's from Kirby.
Yeah. First of all, on the daily chart right here on the E-mini S&P, you can see there's triggers along the way here. All were worked out nicely. But sorry, did you say 5-minute or 15-minute?
15-minute.
15-minute. 15-minute. Let's have a look at the 15-minute. And let's see. Recently, right here, there was one in here. Although momentum had started flattening out, so not as clear. And let me just add some extra data here on my chart. let's go to 10 days and see here. Right in here. Unfortunately, not in this stretch, but I can tell you we have many of our members trading this on not only a 15-minute but even a 5-minute chart, so it works really, really well. Right in here, no, that was in the cloud. Yeah. So, okay, let me just do this so I can show you. I can tell you this works. Let's try that. We zoom in. No. Yeah. Well, no setups recently here, but again, it absolutely does work.
Nancy's asking about the Euro US dollars. She's
Euro
a currency
US?
trader.
Sure. Let's see. You can see on the Euro US on the 15-minute here, plenty of entries along the way. All worked out very nicely during this stretch. Okay. And again in here, same thing. Okay, and let me go to the daily chart. Euro US, boom, beautiful. Many setups all the way through here. All these crosses here. Very nice setups. Okay. Let's look at the hourly, for example. Okay. Right in here. Boom. Nice setup right there. Okay. They happen over and over again. You really don't have to wait long for these setups to happen, regardless of the time frame. How are we doing on time?
We're running out.
Okay, so let me just recap. Let me go back to my presentation here and recap what we've talked about. Okay, so I've shown you a system that works on any market, stock, options, futures, forex, any time frame, any price level. You saw how easy it is to spot on a chart, and when you get used to this, which won't take you very long, you'll be picking them off very, very quickly. It's strong enough that it can be absolutely used as a standalone system or a great complement to whatever you're trading with now. You saw it tends to move in your favor immediately after triggering, and one of the best features is that the majority of the trades that don't work out are not even losers. They're just negated trades. Okay? Now, I know that there's a lot of questions. We'll try to get to as many of them as we can, but let me tell you about a class we have coming up on Saturday, April 18th, 1 p.m. Eastern Standard Time, set for 2 hours. Typically goes 3. I'll be teaching this class, and what I'm going to show you is I'm going to teach you the complete system from entry to exit, including 5 different exit strategies, but focus on the one that myself and the other traders here use on a daily basis. I'm also going to show you a great way and a very unique way of adding support and resistance that really helps you differentiate between the very, very high probability setups and the average ones. I'm also going to teach you 2 Fibonacci tools, one that will help you confirm entries, and the other one that will help you set targets. I'm also going to teach you how to trade this with options, how we trade this with options. I'm going to show you exactly what kind of expiration we want to look at, what kind of delta we want to use, when you might want to buy a call or a put versus a credit spread, all of that. And then we're going to do a search for trades setting up that we can take that coming week. Okay, so I will share my watch list with you. I'll show you how I search for trades. And together we're going to go through dozens of charts and hopefully have some nice trades to each walk away with. As a bonus, we thought we'd also throw in the Ichimoku Kinkin Hoi class. This is a separate course that we teach and sell for $297, but we throw it in. Remember I said that this indicator is used as a strategy in itself. So since you're using a stripped down version here, thought I'd teach you the actual indicator as well, give you a bonus, 2 courses in one. The link for this is tradingwinds.com/move. But before you order, let me tell you exactly what you're going to get so you know that it's right for you. about half hour after you order, as soon as your order is processed, you're going to receive an email with a link to a recording of the previous pro class we did. That way you don't even have to wait until the 18th of April. You can watch this and start trading it now. But regardless, we're going to save you a seat at the live class, and we're going to give you a 30-day membership to our pro service. And this is really the most important part of our service. With this, you're going to receive nightly videos and that highlight trades from all our systems. Okay? And you're also going to receive trade alerts showing you the entries, the exits, the profit targets, all of it. It's really the best part of our service. You also get access to previous our educational resources on our website. You get to view hundreds of hours of videos teaching you all our systems. And with that, we also send you trade alerts on exactly the trades that we ourselves take. Every time our traders take a trade, we will email you the trade alert, and you get all of that for 30 days. Now, together, this is $988 value, but for any of you on this webinar today, it's just $97, okay? And really, you can make that back with just one option contract in no time. So the link is tradingwins.com/move. Now, we do have to limit this to the first 25 people. The whole goal of this class is to teach you the full system so you can walk away and trade this completely on your own. And the way we're going to do that is to make sure we answer all of your questions. So we do have to limit it, unfortunately, to 25 people. But again, this is everything you get. And now, Raul, if there's any time at all, I'd be happy to answer a few more questions.
I've got a couple of questions. I'll try to go through them as quickly as I can.
Sure.
Terry's asking, what's the setting of the moving average again? And is it EMA or SMA?
It is an SMA. It is the 20-period simple moving average.
And what's the setting of the RSI? That's from Shane.
The RSI, we switch it from a default of 14 to 7.
Simon's asking, can you day trade with this setup?
Yes, absolutely, you can.
If I can't attend the class on the 18th, will it be recorded?
Oh, yes, it will. So in addition to the recording of the previous class, you're also going to get a recording of the live class on the 18th.
What happens to my 30-day complimentary membership at the end?
If you're enjoying it, which I'm sure you will, you don't have to do anything. It'll renew at a price of $97 a month, but if for whatever reason you'd rather not continue, just give us a call and we'll put a stop to that for you.
Calling it the world's easiest cancellation
policy.
policy?
World's easiest cancellation policy, exactly.
How much of the discussion during the class on the 18th will be on futures and Forex?
We will cover all markets, again, as well as options. We'll show you how to trade this with options as well.
Mark is asking, he's got a small portfolio, less than $10,000. Will this strategy be effective for him?
Yes, actually, that's another great benefit here. You don't need a lot of money with this. Even if you're trading one lot of shares or just one option contract, you'll do very, very well.
Speaking of options, a question from Brenda.
Sure.
Are the strategies that you're going to be discussing exotic strategies or more simpler option strategies?
Oh, no. We're sticking to the basics here. We're not going to get into, the butterfly spreads and iron condors and so on. Calls, puts, credit spreads, exactly.
We've got a few members, current members on here right now. They're asking how much is it to attend the class if they wanted to reattend?
If you've already attended this class, you can reattend for free, not a problem. Just send us an email at info@tradingwins.com and our staff will set you up.
Is there a phone number where we can talk to a live human being?
Yes, absolutely. 1-888-574-2426.
And no robots. It's actual human beings.
Real people.
You may get a voicemail. That's only because we're on the other line with somebody else. We will get to your call. If you have any questions, leave that on the voicemail. We'll return your call as quickly as we can.
Yeah.
Vince, we're 1 minute over, but this is a very special day for us, isn't it?
It is.
Why is it a special day?
It is, because we have actually been allowed to do a second presentation for you, and that is on our favorite trade setup. Now, many of you who are here might have seen that. We've been on these events with the folks at Investor Inspiration several times, and we've did that presentation. But we've got a special treat for you today, so I encourage you to stick around till the end, because the new piece we've added to this, which was a request we had from many of our members who had taken this course, was to automate it. And we've done so with MetaStock. And so I'm going to show that piece to you as well today. And not only that, but we're going to give you an opportunity to get this for free, the full package. So I encourage you to stick around. I will go through my presentation a little quicker than usual. I'll kind of whip through the repeat the money management rules for the sake of anyone who joined this a bit late. But I promise I'll go through the slides very, very quickly. Then we'll spend time on the charts, and then I'll show you the automated software.
I want to say thanks to Jeff, Martin, Jeff again, a different Jeff this time, James, Clay, Valdemar, Gary, Harm, Maxwell. You taught the class on the 18th, the popular session.
Yeah, it's great, and you're going to love it because we pack so much into those 2 hours. Really, that's why we actually don't stick to the 2 hours. We go till almost 3. One promise I will make you is that I will stay as long as I have to answer all your questions, okay? I promise you that.
You know, the timing for these things tends to be a bit tight. That's why we can't get to all of your questions. I apologize in advance for not being able to get to all of them. I see there are a lot of questions about ordering and things like that. People are asking if we take Discover. You know what? That's actually going to be happening tonight.
Yes.
So if you want to take Discover, call us. We'll take your information down so we can save you a spot, and we will process the order for you.
That's right. So we'll put the link for this course in the chat if we can, tradewinds.com/move. So it's there for you if you're interested. And again, anyone who's taken this class before and wants to reattend, you can do so for free. Just send us an email at info@tradewinds.com. And I'm going to whip through a few slides here. Forget the poll questions, and we'll get to the meat of this.
For folks that are joining us late, we're here with Vince Vora, Senior Trader, TradingWinds.com. We've just finished our winning momentum strategy class. We're now talking about our favorite trade setup. This session is being recorded. You will get a recording of the session. If you'd like to order the winning momentum strategy pro class on the 18th, the link is in your chat box. It's tradingwinds.com/move. Vince, let's get going with our favorite trades.
Okay, so for the benefit of those who joined this after I reviewed the money management rules on the first one, let me just do that so quickly again. Of course, you never want to trade with money you can't afford to lose, but more importantly, you want to trade with an amount that's small enough that it feels completely insignificant to you. When you're in a trade, it's very important to remain calm and be able to follow your rules, and you won't be able to do that if you're worried about the amount of money you have in there. Also, never risk more than 5% of your account balance in any one trade, and if you have a larger account, reduce that to either 2.5% or 2%. That way, you're significantly reducing your risk while still maintaining a decent trade size. Also, never have more than 50% of your account balance active in the market at any one time. The purpose of this is to reduce any major loss that would happen with an event such as 9/11, and also to have money there available to put back into the markets and recoup those losses should such a loss happen. Also, with this system, you're going to get plenty of setups. So what you want to do is spread your trades out. You want to select the 1 or 2 best per time frame, because when you have an environment like we're in right now with a lot more volatility, and we have days where the Dow is up 300 and the very next day it's down 300, you don't want to get caught in a situation where you go put on 5-6 trades and then the very next day market pulls back and you find yourself in a big hole. You want to spread your trades out and be very selective. Also remember, you'll never go broke taking profits, okay? As you get more and more experienced in the markets, you'll learn how to trade and stay in the trade a little longer each time. But until then, get used to banking those profits. And remember, trading is never about whether you're right or wrong. That's important. It's not about ego, but it is all about how much money you make when you're right versus how much money you lose when you're wrong, okay? Now, what are you going to need? Similar to the other one, not very much. This is compatible with any charting platform. The reason being, we're only putting one indicator on this time, and it is the 20-period simple moving average. That's the only thing we're trading with here, okay? So you don't need new hardware or software. I'm sure you've got everything you already need. The benefits are similar to the other system where this does work, and I'll show you, I'll prove it to you. Any market, stocks, options, futures, or Forex, any price level, you don't need a lot of experience. It is very simple to spot on the chart, even easier than the other one. Very clear entry and exit points, and very consistent as well. So when we first sat down for this, there were 5 main things we were looking for. It had to be very simple and easy to spot on a chart, had to be used on any charting platform, easy enough for just about anyone to use, but more importantly, extremely low risk, believe it or not, even less risk than the other strategy, and very, very consistent throughout all types of market environments. There are 2 components to this. The 20-period simple moving average I've already mentioned. The other is you're going to be looking for engulfing candlestick patterns. Now, if you're not familiar with them, I'll explain it. If you are, understand we use it slightly differently than most, and I will also explain that, okay? So I'm not going to go into the definitions here, but I will tell you that the engulfing pattern is actually a reversal pattern that takes place at either the end of a downtrend or an uptrend. But I'm going to bring up my live charts again and draw this out for you, okay? So give me a second to switch over here, and I will show you exactly the setup. Now, very similar to the other one, what you want to do is start by removing your indicators off your chart and find those markets that are trending nicely, okay? And you're going to be looking for trend and momentum, except this time you're not going to have the cloud on or anything like that. You're just going to have your simple moving average on. And you want to judge that momentum exactly like I showed you before with slope. So in other words, the slope of the bars, if my mouse will work, there we go, or the slope of the moving average. And the reason why we use the moving average is because during periods of a pullback or consolidation here, it would be easy to mistake this for downward momentum. But as you can see here, the 20-period moving average maintains its slope, so it helps us identify the fact that this is merely a retracement before a continuation of that move, okay? And of course, when it comes to momentum, we want, you know, the more significant that slope, the better. So we want a very significant slope, higher or lower. It works exactly the same way, both ways. The more significant that slope, the better. So let's review the rules for this. And this is what it's going to look like, okay? We want trend and momentum, and this is the setup for a long trade. And we're looking for that slope, again, the more significant the better, then some kind of pullback or consolidation. And then it's at this point that we're looking for a reversal sign to tell us that this pullback is over and that this trend higher is going to continue. And what we're looking for here is a bullish engulfing pattern, and it is going to look something like this, okay? Now, there is a difference between the setup and the actual trigger to get in the trade. And for the purposes of the setup, what you're looking for, actually, you're only looking at the bodies of the candles, not the wicks or the tails, just the bodies. And to be a valid bullish engulfing pattern, you want the body of the candle on the right to completely engulf the body of the candle on the left here, okay? They can be at the same level, one end or the other, but the body of this candle, the candle on the left, cannot exceed the opener or close of the body or of the candle on the right, okay? That's the setup. Now for the trigger, you are going to consider the tails or the wicks, and what you're looking for is a trade just above the absolute high of the engulfing candle, this one, okay? including the wicks, the absolute high. Okay, you need a trade above that. Should you get that trade, you go along, your stop goes just below the low of that same candle. That way your risk is always contained to the range of that one candle and nothing more. Okay, and I'll show you several examples. But before I do that, let me just explain setup for the short side, which is the exact reverse. You're looking for that slope lower, okay? More significant the better, some type of pullback or retracement, and it's in this area that we're looking for that reversal sign to tell you that this pullback is over and that this move lower is going to continue. And what you're looking for is a bearish engulfing setup. Okay? Again, for the setup, you're only looking at the bodies of the candles. And just like the bullish engulfing setup, you want the candle on the right here, the body of this candle, to completely engulf the body of the candle to the left. Okay? The only difference is that for a bullish engulfing pattern, you want the engulfing bar to be green because you want it to close as close to its highs as possible. The closer it closes to its highs, the stronger the setup tends to be. And for a bearish engulfing candle, you want it to be red because you want it to close as close to its lows as possible. Now, in both cases, the previous candle can be either color, green or red. It really doesn't matter. Okay. Now, to enter on the short side, again, for the trigger, you are considering the wicks or the tails. You want the absolute low here, and you're looking for a trade just below that absolute low. And if you get it, you go short and your stop goes just above the absolute high. Again, limiting your risk to the range of the one candle. So let's look at some examples, and I'll zoom in a moment for those of you working on a smaller screen. But we're looking for that trend and that momentum. Here is a chart of the Qs, and we've got a nice slope higher here on the candles. Whether we measure in the candles or the moving average, we've got a nice slope higher. Then we get this consolidation phase, about a week and a half where it goes sideways, and it's right in there that we're looking for that reversal signal in the form of a bullish engulfing pattern to tell us that consolidation is over and that move higher is going to continue. That's exactly what happened. Let me zoom in here for you. So here is the bullish engulfing mark. Look at the body of the green candle completely engulfing a much smaller body of that red candle. Okay? Now, that's the setup. That's a valid setup. For the trigger in, we're looking for a trade above the absolute high of that engulfing bar, which is here. Okay? And once we get that, we go along and our stop goes just below the low of that same candle. That way our risk is limited to the range of the one candle. Now there's two very important rules here that you must know. One is if it trades below the low first, the trade is disqualified. Okay? And that one rule alone will avoid most losses that you otherwise would have had with this system. Okay? Secondly, if you get two full candles closing after the engulfing mark and you still have not traded above the high, you also want to disqualify that trade, only because obviously the momentum isn't as strong as you initially thought. Okay? But if it trades above the high and thus before the low, and does so within the next two candles, like it did here, where it traded above the high in the second candle, then it's a valid trigger to go long. You go long, your stop goes just below the low, and then it's a matter of managing that trade. Okay. The other thing you're going to notice is that it once it's triggered, it does tend to move in your favor immediately, which is very important. Because again, and that'll help you remain calm once you're in a trade and manage that trade appropriately. But also for any of you who trade this with options, you know how important it is. Because if you open an option trade and it goes against you, trying to make back that loss in premium is going to require a much greater move to the upside to not only make back that loss, but then put you in profit. But if it moves in your favor immediately, you're already in profit, and it's a much more beneficial situation. Here's a chart of UAL. And clearly in an uptrend, nice solid slope higher. We get a pullback, and see during this pullback, it doesn't matter whether we get the reversal signal in front of the moving average, overlapping the moving average, or beyond the moving average. What matters is that at the time that you do get it, the slope on the 20-period moving average has not changed. In other words, the moving average has not gone flat. If this were to pull back too far, the moving average would go flat, which means you've lost momentum and you no longer want to take that trade. Okay? Once you get this bullish engulfing setup, you look for a trade above the high to enter, and your stop will go just below the low. Now I'm going to zoom in here because there's something very important here I want to show you. You see, we're lucky on this trade because the very next candle here actually triggered us in before the gap. But if your entry, if the next bar after your bullish engulfing bar happens to be a gap such as this, then you have to reassess your risk, okay? Because your entry would be at the opening of that gap, but your stop would still go just below the low. So now you're no longer capping your loss to the range of that one candle. It's now from up here to down here. Okay? So if that's the case and it's too much risk for you, then forget about it. Because typically during a sustained move, one way or the other, you will get multiple setups along the way. Okay? Let me show you another one here to the downside, and here in yellow I have a couple of trades marked that would have been disqualified. So let me zoom in here for you and explain why. Here we have a gap lower on Mattel, and the stock continues moving lower. We have a nice slope downward. We get a consolidation period, and right in here is our bearish engulfing bar. You can see the body of this candle completely engulfing the body of this candle. So at this point, we were looking for a trade below the low, but instead, a trade above the high first. That's why that trade gets disqualified. A few days later, we get another setup here, okay? And here's a red on red, but this body completely engulfs this body. So again, we were looking for a trade just below the low here, but we got two more candles, and neither one had traded below the low yet. So again, it's disqualified, okay? So we're a bit more patient, we wait, and now right in here, we get another opportunity, and this one worked out really nicely, okay? Again, body engulfs this body, wait for a trade just below the low, we get it on the very next candle, we're in, our stop goes just above the high, okay? And off we go. And this is why this has such little risk. Look at the range of that one candle versus your potential profit, okay? It's huge. Here's a couple more setups, okay? Each of which were worked out very nicely. It's just, again, trading with trend and momentum is huge. Works on different time frames. Has been very consistent for us throughout. Here's another couple examples on Starbucks. And you see, you can also be selective based on the range of that engulfing bar. Let's look at these two examples. Here's this one. Look at the range of this bar. Okay, and there's our entry. There's our stop. There's the move. Okay. Now let's zoom out and look at the other one, and let's compare the two. Here's another one. But look at the range of this candle. Right, even smaller, which means your risk is that much less. So this is all you're risking versus your reward. And no one's saying you're going to get the absolute top of a move. No, you're not. But we have an exit strategy that will allow you to capture the majority of that move. Okay, and that happens to be the exit strategy that we actually programmed in to the MetaStock indicator, which I'll show you in a second. before I do so, let me just show you that it does work on futures as well. Here's a chart of crude oil futures. These are the highlighted entries, okay? And you can see that not only did it work out really nicely, but it moved in our favor immediately, okay, which is very important. The Forex, same thing. Trend, momentum, waiting for the consolidation. It can be a couple of days, or a couple of bars, or many bars. It really doesn't matter. What matters is that when you get that reversal signal, the slope in that 20 is still intact. Okay? You enter, your stop goes on the other side of the candle, and off it goes. Okay? Very nice trades. Very easy. All right. So we have been displaying this for several months, and we've had a number of people ask for not only an automated version of the indicator, but also a scanner. And so our friends at MetaStock did that for us. So let me show you what this looks like here. So here is our indicator, and we've done a few things with this. So let me show you. These little diamonds here. Now, they're going to be colored green for long trades and red for short trades, okay? But the diamonds are what you would call your setup bar, and then the arrow is actually the trigger in. So you can see here on Nike, okay, there was this pullback. You got a setup bar, and this is your engulfing bar right here, okay? And there's the next bar trades above that high, triggers you in, okay? And then it rides it out and then presents you with an exit here. Now, we've color-coded the bottom row here to help you identify the slope. In other words, when you see green, that means there is a slope higher. When the slope goes flat, it's white. See, there's no more slope. When it picks up its trend again, we've got it colored in again, okay? Both ways, red, green. So visually, we've made it even easier for you. Rather than you trying to judge the slope off the 20-period moving average, it's right here for you, okay? The other nice thing you can do, and you can see here on Nike, there's a recent trade here that we haven't exited yet, okay? We're still in this long trade here. But even better, as a way to kind of hold your hand and walk you through it, they developed what they call expert commentary right here. If you click view, go to expert commentary, that will bring up here this overlay that tells you a bit about the indicator, but also in green for long trades, and of course in red for short trades, it will tell you where you're at right now with that trade and what you should be doing. So you see this little black arrow here above the most current bar? That is the bar that corresponds with this commentary. In other words, it says my favorite trade setup is in a long trade, and traders currently long should have their current stop loss at 98.24. Okay, so it walks you through it. Now, the other nice thing you can do is move this arrow along anywhere you want it. If you just click above the bar that you want, it will tell you where your stop would have been at that point. Okay, you see now the stop here has changed because I moved over here. And when it's on the entry bar, okay, it'll tell you exactly what you should do. And the setup bar, and you see here where it says to confirm that this is a valid buying opportunity, you must wait for a trade above 96.79, which was the high of that bar, right? A trade below 95.50 would invalidate this trade. It lays it all out for you. It even tells you what you should be looking for if you're considering trading this with options, etc. What kind of expiration, what kind of delta. It sort of does it all for you. Okay, very, very nice. You can also move that arrow along by using these arrows here. Go back and forth. Okay. The other thing you can do is actually plot the stop loss indicator on here. If you go to the drop-down list of the indicators, you've got a Vora favorite trade stop loss longs and one for shorts. What you do is you hover your mouse over, you click and hold, and you drag it onto the chart. Okay? When you do this, You want to merge with scale to the right here. Click OK, and it plots it for you. Now, if you double click on this indicator, you can change it. The way I like it is I like to match the color, and I like to use the dots instead. And then you click apply, and see it's a much easier thing to follow. It tells you exactly when and where you should move that stop. And if you had your commentaries open, once we got to this bar, it would tell you exactly what to do. Okay? It's a very cool feature. So let's look at another one here. Let's see, Rose, anyone want to look at a particular stock? Please let me know if you want to look at.
Got a couple people asking about USO.
USO.
We're here with Vince Vora, head trader at TradingWinds.com. He's demonstrating our favorite trade setup, MetaStock add-on.
Okay. So now you see, if I still have my stop loss for my longs in, and that's why it's putting these green dots here. That was the last stop loss that corresponded with a long trade. So what you want to do is click on it to highlight it, and then you can get rid of it. And what you want to do is go back to your indicators and select the one for shorts. Put that on. Again, you can change it the way I do, and you can set it as defaults as you want. I'm just leaving it this way so I can show you that it's customizable. Okay. Oh, I didn't change the color. I guess I can change the color to red. There we go. Okay. And again, it'll highlight the setup bar, then the entry bar, identifies immediately where your stop loss should go and where you're moving it along, and tells you exactly when you're going to exit. Okay. Also, a really nice feature of this is the scanner. Rather than you flipping through charts one by one, you can do a quick scan, and you can do so here by going into the Power Console, okay, going to the Explorer here, and let's see, we'll do this quickly. Here's a Vora favorite trade setup scan. So there's a scan for setups and a scan for triggers. In other words, the diamonds and the arrows, whichever one you want, or you can do both at the same time. Once you select what you want to scan for, okay, you go down here and you select which markets you want to scan for. Okay? So you can go to your equities North America here. All right, you can select all of them, and that'll use them all. But the more you scan for, the longer the scan will take. Or you can be selective and pick one. So let's see, let's look for, let me just show you how this would work. If I wanted to scan for U.S. optionable stocks, okay, there's roughly over 4,200 of them. All right. Once I've selected that, I just click Start Exploration, okay, and this will take a few seconds to a few minutes, depending on, you know, how many you've selected. But you can see that it's going through this, and it's telling you how many items it's completed, and so on. And so now we're up to 47. So you see, it won't take that long, but if you're doing thousands of them, you can set this up, walk away from your machine, grab a drink, come back, and in a couple of minutes, it'll all be ready for you to go. So I'm going to cancel this for the sake of time. But it's that easy, and visually, it's fantastic. Okay, you really can't go wrong. And then it'll bring up a report for you, and it'll identify the ones that it's showing you. And right from that report, you can click on the symbol, and it will bring up a chart for you. Okay, very easy to use. Saves you a ton of time, and will walk you through each step of the order, both with the text and with the visuals on the chart. Okay. Well, if there's any questions, if not, I do have a couple more slides as well. I don't know how we're doing on time.
We've got about 10 minutes left, so we'll go through them as quickly as we can. Awesome system, awesome setup.
Yeah.
The commentary was what really took a
long
time, didn't it?
Yeah, MetaStock did a fantastic job with this. We're really, really happy with it.
John's asking, what does the solid or white bar represent for respective green bars and black bars on the charts?
Oh, so here, the thing is, once you're in a trade, if you're in a short trade, it paints them all red, okay? And if you're in a long trade, it paints them all green. Otherwise, there is no color, and the white bars are what otherwise would be green bars are up days, and the black bars are down days, which would also be red. But the reason why we've taken the color off here during periods when you're not in a trade is for you to easily identify when you are. So it also helps with the exit here. You know, you see the white bar, and then you know you're automatically out of that trade as well. So we've just tried to make it a little easier visually for you.
What's the best part about the system? Is it the time that you save scanning, or is it the accuracy?
It's both. You know, one of the main things that traders have a problem with is discipline, right? Following the rules. And, you know, a lot of people try to keep a journal and write down their rules and, you know, use checklists and so on. This kind of does it for you. Having that commentary right there telling you what to do every day is perfect. And then, of course, the scan will save you hours and hours of research, so it's a win-win.
We've got about 10 minutes to go. I know you've got still a little bit more to present, so we'll come back to a lot of the questions that we have just after you finish.
Okay, so let me just summarize again. It will work on stocks, options, futures, forex, any price level, any time level. Very simple to spot on a chart, with or without the software. Fantastic standalone system, proven over many, many years. You saw that it tends to move in your favor immediately, which is huge, not only from you know, that discipline perspective, but also for any of you option traders. And again, a really nice feature here based on that one rule is that the majority of the trades that wouldn't have worked out with this are not even losers, they're just negated trades, okay? So we have a class coming up on this system as well. Friday, April 17, 2015. It will also be recorded if you can't make it. And I'm also going to show you the entire system, start to finish. Take my time with it. Today we're a little rushed, and take my time with it, and also include those 5 different exits, but that one that we have programmed into the indicator is where we'll spend most of our time. I'm going to show you how to add that support and resistance in to really increase the accuracy. The 2 Fibonacci tools, 1, which will help you identify entries, 2, that will help you identify targets. I'm also, during that class, going to give you 4 additional trade setups. In other words, at those points where you're looking for those engulfing patterns, there are actually 4 other patterns you can also look for that will help you identify those trade entries. And I'll show you those as well. That way you'll be very active in the markets. And as a bonus, I'm going to show you a different tool in case you don't have the indicator that will save you hours and hours of research as well. And, of course, we're going to do a scan together for real-time trades coming up that coming week. Okay. Now, Raul, you might want to touch on this point. Tiger Woods Masters Special.
You're just a sports junkie, aren't you?
Yes.
So what's the special that you have?
Well, we had some fun with the Super Bowl, and now recently with March Madness, and we always try to give our members a way to get our system for free. And I'm going to show you how to attend this class, but one way that you can get everything for free is if Tiger Woods actually wins
this year.
This year.
Not in 2020.
It starts Thursday, right?
Starts Thursday.
Starts Thursday. So if Tiger Woods wins the Masters, we're going to refund everyone's purchase today. Okay? So the link for this class is tradingwins.com/auto. Once again, let me tell you exactly what you're going to get so you know that it's right for you. Okay? You're going to get, in addition to this course, you're going to get the actual MetaStock add-on, which we sell for $4.97 on our site. Okay? You're going to get a recording of the previous class, which we normally sell for $2.97. You're going to get a live seat to the class on the 17th, okay? And you're also going to get a 30-day membership to our pro service. Let me remind you again and it's the most powerful way to get access to all our systems. Okay, you're going to get real-time trade alerts showing entry stops, profit targets. It really is the best part of our service. You're also going to get the premium nightly videos that teach you how to trade the various systems we have. You're going to get access to the members-only weekly chat, which happens actually every Thursday morning from 10 to 11. They've been great sessions. Those are all included. You get to come into our room, ask me any trading-related question you like. And in addition, you also get to access the library of past educational materials, and you can attend any of the pro webinars that you've paid for in the past as many times as you like. Just email us, and we'll set you up. It's an incredible value, and it's all yours for 30 days. Altogether, it's an $1,188 value. Special offer we have today is just $397. But again, just like the green jacket, the Masters, if Tiger Woods gets the title, we will refund your money, no questions asked there, okay? Again, we do limit this class to 25 people, but we are so happy and pleased with this indicator. It's fantastic, and we think that it's really the, what's the saying? It's the main piece here. This is the
pièce de résistance.
Yeah, that's it. It kind of does it all for you. It's really, really cool, and we're really happy with it.